Hello and welcome back to everyone who's still here during the bear market year. Bitcoin is currently in a window of strength. As we have seen in the past midterm years, this often does happen during July. I do hope we get to see lower prices at the back end of the summer, and I do think we will. But the question is, where is the path to take it there? Regardless, it does feel good to have a nice phase of fresh air, allowing us to prepare for all potential outcomes. As we have discussed prior, July can be a window of strength for both Bitcoin and risk on assets, and a time for weakness for risk off assets such as gold, oil, and other risk off industries. In my opinion, of course, there are four main ways Bitcoin can market cycle low this year. My base case being a normal bear market path, where we next sweep the bull market support band at the back end of summer, while also being tracked by the 200-week moving average for support before Bitcoin has to make its final decision, where most likely it will choose to find its way for the final low. Another main alternative to this is purely time-based capitulation. As we have seen in many of the last cycles, bear markets tend to last averagely 1 year. If the same is to play out, it would suggest that we have roughly 76 days until the low should be in, until making a recovery. I do think it's unlikely that the low is already in for Bitcoin, although it could be alongside a straight up capitulation event for Bitcoin. However, during these windows of strength, we must prepare for these scenarios no matter how likely we think it is to happen.
Looking now at is now the time to buy Bitcoin chart. Bitcoin is currently trading just above its super cheap region, fighting to remain above its 200-week moving average. It is important not to be too greedy and wait for lower prices to occur, as everyone wishes that they bought at the 200-week moving average when Bitcoin is in its expensive and very expensive region. However, it is also important not to be too aggressive and FOMO into relief rallies, where you are likely to get wrecked and wish you had waited to buy at lower prices. That said, the last time Bitcoin entered its super cheap region was all the way back in June of 2022, and if you had bought back then, you would still be substantially above water. So we must make sure not to take times like these for granted, but zoom out instead and look at the bigger picture. Using calculated on-chain risk, we can see that Bitcoin is entering the last phase of its bear market year, with many on-chain variables suggesting accumulation. Variables such as the MVRV score, Newport score, alongside distances to balanced and realized prices, are pointing towards that we are near the end of the bear market with how low these values are. But with social risk now leaving the extreme fear region, from when we entered at the end of June and start of July, it doesn't come to a surprise to me that we now have gurus online calling for the end of the bear market and higher prices. Yet, many of our on-chain variables have yet to hit past cycle lows, therefore hinting that we could be visiting lower prices soon. Now, this does not have to be the case, as reason being our apathetic top in 2025, meaning that we do not have to go as low as normal bear markets. Arguments online also support this view, stating that many top indicators did not go off last year, so why wait for bottoming indicators? But I do believe in time-based capitulation alongside the 4-year cycle, as that has yet to fail. The best plan is to get away from CT and try to remain as objective as possible. As far as other markets, the S&P 500 has recently showed some strength, putting it potentially wants to go higher and is a price discovery once again. But technically, we are starting to see a bearish divergence form, like we saw back in 2024 before entering a correction. This likely will act as a headwind for assets higher up the risk curve like Bitcoin itself. Our SPX M2 fractal taken from the early 2000 dot-com bubble is also yet to break. I'm still interested how long this can continue until the chart does break, whether this be to the upside or the downside. Looking at the US economy, we did have a positive inflation print recently. Hopefully this gives the Fed some more headroom to sort out any recessionary issues that have been triggered by political tensions and tariff repercussions in the last year. That said, unemployment is still on the rise and has been since 2023. Hopefully, if inflation starts heading in the right direction, the Fed can remove its hawkish standpoint with rate cuts, providing a better macro environment for risk assets. Liquidity-wise, we are now in a period of QE. This is interesting to me, as this chart is almost the exact copy of 2019, where an apathetic top in Bitcoin was followed only a few months later by QE, allowing the government to print its way out of any issues. Obviously, I'm not calling for a sudden black swan event like the COVID-19 crash, but it's interesting to me how the almost exact situation-like scenario we find ourselves in 6 years later. It is clear to me that Bitcoin is still tracking its midterm year average. If this continues to track, we can assume strength in Bitcoin until late July and early August, where Bitcoin has to make a decision to either roll over or be done with its bear market. Through Monte Carlo simulation, we can simulate both the July window of strength and the rest of the bear market cycle. Now I know no simulations are perfect, but they are good for making objective standpoints on the market and help predict based on past cycles where we are likely to reach in this brief rally. In terms of the altcoin market, Ether's had some decent rally despite getting annihilated early this year and performing pretty poorly last cycle. ETH Bitcoin looks to have potentially found some sort of low if this monthly candle can remain green. July last cycle was also green for ETH Bitcoin, followed by a green August before finding a top. The question for me remains, is if Bitcoin on the next leg down, if ETH can remain above its 0.1 to 0.11 level that it's held since all the way back in 2019. If this fails, I do think ETH may be on a rocky road south. And of course, again online, many people are screaming for alts to outperform Bitcoin for the rest of the year, showing many charts such as Total 3 forming some sort of double bottom, with Bitcoin dominance stalling. However, come later this year, many of these gurus will be trapped and will be forced to sell. I do think many investors are likely to turn bearish at the wrong stage of the cycle. We can see in past cycles that bear markets tend to end with huge selling volume, where many investors are liquidated and forced out of positions, catching them completely offside for the next bull market to start. Overall, the current Bitcoin risk score is sat at 0.25, below my 0.3 threshold, for where I start to DCA into the market. Now I know I would reap the most rewards if I could time the bottom perfectly. However, I know if prices got to the specific level, it would be extremely hard for me to chuck all my cash in at once in case prices went lower. For me, using a dynamic DCA risk threshold where I start to DCA below 0.3, double my buys at 0.2, and then triple them at 0.1, I make sure I remain covered in the market, not missing any opportunities, while being able to use risk to cover both downside and my emotions. In terms of changes I made to my portfolio this week, it was simple. I accumulated more Bitcoin. For me, using a dynamic DCA risk-attuned strategy is the best way to navigate bear markets rather than try and trade the market or time the exact bottom. I'm still somewhat on the fence with ETH. Luckily for me, I've been holding Ethereum for some time and I can stomach many of these drops. However, I'm more personally concerned about its performance against Bitcoin rather than its fiat value, as for me that shows how strong a project is. And finally, as a wise man once said, trade the market you have in front of you, not the market you wish for. Thank you.